Hi guys, in this session we are going to discuss about swaps, basically interest rate swaps. So we'll discuss that in details, how swaps works and how that breaks comes in your reconciliation queue. So we'll discuss that in details. So I just need your 10 to 15 minutes so that you can understand it in a better way. And after this session, I'll assure you, so no one will have any questions about interest rate swaps. So let's discuss with what is interest rate swaps, or what are, let's say, swaps. It means, guys, see, it's an exchange of cash flow at a net basis on a reset date. It means it's a settlement date. All right, counterparties can exchange anything like currencies, stocks, bonds, interest rates, or business revenue, and also risk as well. All right, in return of certain fixed amount. So that's how basically swaps works. So now let's take one example, because there are different types of swaps like stocks, bonds, interest, right, currencies, or there are a number of swaps. But in this particular session, we are going to discuss about only interest rate swaps. How interest rate swaps works, let's discuss now. See, when we say swap, guys, and if we talk about interest rate swap, so it means we are talking about interest rate swaps and how we can exchange interest rates with different counterparties, and why we'll do it. See, first thing is why we'll do it. The reason is, if you feel as a counterparty, if you feel that your interest rate is not, let's say, not reasonable, and that you want to exchange with other counterparts, then you can look for an exchange. Same applies to the other counterparts as well, or vice versa, that you can say. Reason is very simple. For example, let's say I have applied for a personal loan. I have taken let's say personal loan, or loan of 1 lakh rupees, and I'm paying 9% interest rate to the HDFC bank. All right, and on other hand, other counterparty already have taken loans from Axis Bank, and also they are paying around 8% fixed rate of return on loan amount. But here, guys, you can see one thing. If I'm paying 9%, right, so same 9% which I can feel that, look, the other bank offered 8% fixed interest rate, and that guy is paying 8%, and which is very lucrative. And why I am paying 1% extra? Because my interest rate is, let's say, which is variable, and that's what I'm paying higher interest rates. All right. So vice versa, same, let's say you are at other side, you can also think like, look, I'm paying fixed 8%. What if this, the variable interest rate goes down in the market? Then I'll be in a loss, right? I'll pay, let's say, what if after one quarter, let's say, variable interest goes down, and which is around at 7%. So it means that would be your 1% would be your loss every month, every quarter, whatever it is. Means how, see, the calculation that works in a very different way. All right, but you can see that 1% loss annually. So that's how things works. So let's take this example. See, first condition is, if you want to sign a swaps, interest rate swaps, or any swaps, the condition is there should be underlying something. And here in this case, the underlying is notional amount. Notional amount, it means which is a borrowed amount. Let's say both the counterparties, they have borrowed from their different counterparts or banks, and now they have a liability which is $1 lakh or 100K amounts, and that amount will treat as a notional amount in the swap contracts. All right. See, two things are very important. Now, before signing swaps, we have an interest rate of 8%, where the A party which is paying to their banks. All right, and that is a fixed one. Let's take an example. This party, A party, is paying 8% interest payments to the Axis Bank. All right, and on other hand, there is another party which is a B. They are paying again interest rate of 9%, right, to the HDFC Bank, and rate and here if you see 9%, which is something, the variable portion, 9% which is something variable portion that the B party is paying to the HDFC Bank on loan amount of $1 lakh, or let's say 1 lakh rupees, whatever it is currency that you want to take it, you can. All right, let's take a USD currency. So on a 100K amount, one party is paying 9% interest payment and another party is paying 8% interest payment. See here, see the game is all about, guys, perception, or maybe you can say your own research or your own expectation, that what you guys are expecting from your current deal or from current loan amount. All right. Now, if we talk about B party, why B party? See, B party is currently paying 9% to the bank and A party is paying 8%, but the 8% party, which is paying fixed one, that would be fixed for entire, lifetime of a loan. And let's say the B party is paying 9%, which is variable. When the central bank announce some changes in the interest policy, that 9% will affect. Maybe it will increase or decrease proportionately. That depends on the RBI. All right. So here, see, both parties have their different issues. For example, let's say A party is thinking that, look, what if the interest goes down? Then A party would be in loss. All right. And now A party is thinking, what if the interest payment, still, if the bank announce again additional increase in the interest payment, then I'll have to pay more liability, right? So that's when they are thinking to enter in the swap contract so that they can connect with the banks or maybe agents, swap agents like Barclays Bank or let's say State Street, JP Morgan, Goldman Sachs, BNY, right? Morgan Stanley, all are the agent banks which can help you, means as a party, counterparty, to sign a swap contracts. And once the parties, both are ready, then they can, go ahead with the ISDF framework, which is a derivative, swap international, framework, I would say, for a swaps contracts. It's an association provide framework for derivatives. And then they can sign a contracts and also include term like fixed, variable, and the difference of, you can say difference of interest payment, they can settle in net, they can settle in cash. So that becomes your coupon payment amount. All right. So let's talk about how the coupon works here in this particular. See, coupon is nothing but, guys, coupon is all about the difference between your fixed leg and variable leg. So that amount or difference of that cash amount, we'll call it as a cash flow, or maybe we'll call it as a trade fee, event fee, or maybe sometime that you can call it as an interest payment, simple. All right. Here if you see, let's say counterparty, they have signed a contracts for 1 year, right? And every quarter this particular, let's say, interest payments will settle in the broker's accounts, and broker will help counterparties to exchange, the net cash flow and all. So that's how, on the basis of that terms, let's say both the counterparties, they have signed swap contracts for 1 year, and they'll continuously exchange the cash flows with each other. All right. So here now, if you see the current interest payment, which is a fixed percentage where A party is paying to their banks, and the party B, which is paying 9%, which is a variable, component, is paying, if you see this one. But post, this swap contracts, if you see the equation, see, basically A party is looking 9% interest payments. Why? The reason is post, execution of swap contracts or initiation of a contracts, of course, the interest rates will exchange, right? So it means B's interest payments where A is expecting, and A's interest payment where B is expecting. All right. So that's how they are agreed with interest payment terms. All right. So now if you see, I have charted out, if you see, post initiation of swap contracts, 9% interest payment goes to the A, and 8% interest payment, comes to the B counterparty. All right. And let's assume it's a first quarter where now we have reached, and it's your time to calculate the F leg and V leg. F leg, it means, it's a language, guys, again, F, which talks about fixed rate of return, and variable talks about, which is a variable, interest legs or interest payment. All right. Let's talk about that part. So now if you see, at the time, means, once you reach to the, let's say, reset date or settlement date of this particular contracts, all right, here we'll compute the interest payments on the notional amount, whatever notional amount it was decided, all right, or pre-agreed, will compute interest payments on the basis of that. See, if I calculate here, you can see noted down the formula, total notional amount into interest payment, right, divided by 100. Again you can divide with 4 it means in a 1 year you can see 4 quarter, so you can divide with 4, so you will have almost $2,000, right, which this amount, because see we have already agreed 8% that will pay to the B, right, so it means 2,000 that you can pay to the B. Now we are talking about A books, right, counterparties A books only, all right, so pay 2,000 to B, so it means this portion we can book it as a pay. And if we now talk about receive portion, see again total notional amount into 9% divided by 100 divided by 4, so that would be somewhere around 2,250, so which will receive from B to A, right. And now let's talk about difference. So difference is almost 250, which is positive difference. See this positive difference which will receive from B to A. Receive from B. So actually if you see, instead of this 2,500 payment asking counterparty to settle, so you can ask counterparty to settle only $250, that's all, and that's become cash flow of your swap contracts, all right. So that become your cash flow of a swap contract, and same calculations you can initiate in the books of B also, because B will record 200 and 250 which is paid to A, which is again which was committed or agreed as per the swap contracts, and $2,000 which will receive at the interest rate percentage which is 8%, which will receive from counterparty A to B, right, and the net difference if you see which is $250, so that becomes the liability or expenses for this particular counterparty B, where B will pay this particular amount 250 to A. All right, so this is how your actual contracts settled on a quarterly basis, and broker update the statements. You can download the statements from broker and actually perform reconciliations of that particular breaks, right. See, every quarter you will have to perform same calculations, but if you see in this second quarter we have seen the variable interest payment which has been changed from 9 to 8.5. So it means in this particular scenario you can see the interest payment, the difference which is at around 125 rupees or dollar I would say. So it means counterparties will exchange only 125, right. Still a counterparty which is in profit of 125 from this particular contract. And this guy, see one more important thing. See, this difference only becomes the value of this particular contracts. All right. See, this difference amount only will treat as a valuation of this particular contract. All right. Now, in a third quarter, if you see again variable interest rate which has been changed and come down, at 8% from 8.5%. So it means in the third quarter, if you see, there won't be any cash flows. The reason is this counterparty means A will pay $2,000 to B, and again $2,000 received from B. So it means here if you see in this particular case, here would be zero cash flow and no counterparty will settle the payments in the books of account. All right. So it means if you see, if the fixed interest rates and variable interest rates, if the both are same, then nobody will sign again swap contracts, because there is no opportunity to generate any kind of arbitration, I would say. And if there is no opportunity, then you don't need to sign contracts also. All right. So this is how counterparties, guys, exchange cash flows. So let's talk about in terms of recon, how recon works. All right. See, if I talk about now party B you can treat as a fund, right, GMT fund, let's say, and now we are performing reconciliations in the books of GMT fund only. All right. See, in the books of GMT fund, See, there you can see two different swap IDs, right? Swap ID V and swap ID F. So it means variable and F leg that you can see, and the additional difference will receive through coupon, as I said, right? And then currency. And in terms of accounting side, GMT fund can record. See, GMT fund can record, which is 2 minus 250, again plus 2000, which is a fixed one. All right, variable was 2250, and the difference, if you see, difference that will have, which is broker will post. Broker, it means of course broker only post difference, guys. Here the difference you can just compute and see how much would be the difference. Only $250 that broker will post it. So it means broker update the statements, and statement versus ledger, if you see here, you can match the difference. All right. So here we are looking for minus 250, but so we need this one should be actually for a reconciliations. I would say this one should be positive, then only you can match it off. The reason is here we have minus 250, so where we gonna pay 200 and 250, right, dollars to the counterparty. So in that way you can just relate. Or let me see, there is a something that this should not be minus, I would say. Then now this becomes your minus, how it looks like. We'll have to fix the calculations, because in terms of calculations what we need is this one. Let's say if we pay 2000 to B, and if that counterparty pays to us, so it means the difference only, let me calculate again, which is 250. Counterparty will settle the difference of only 250, but it should tie with each other, 250. All right. So so this also it should minus, just for a reconciliation purpose. Now you can just simply 0, so it will net down 0, and this portion you don't need to be denote as a positive. So now it will come down at 0. So same logic you can apply it here as well. So if this is something, just add it. So now if you see 0, so it means broker posted coupon 250 USD, and you have also booked, you can say 225, because see, these are the accounting side, it means ledger side. We actually book those breaks in the system on swap IDs, and once you book it, so that will reflect as a ledger. All right, and that ledger difference, basically ledger difference, ledger 1, ledger 2 difference, where the broker will post it, and that difference you can exactly match, and it will tie it out, and same break you can match it off. All right, and if you see, if let's say your statement versus ledger getting matched off, then match it off, update the comment, or maybe directly match it off in system. There are different reconciliation systems, but again, now your question would be like, how can I identify, let's say coupon is related to that breaks only. See, sometime most of the the securities which are traded under the Bloomberg, so it means Bloomberg that provide IDs, which is BBG ID, you can say Bloomberg ID, so that Bloomberg provide it. and through that ID you can perform the reconciliations of different swaps breaks and resolve it out. All right. And what if, let's say, there could be different scenarios also where let's say only coupon posted and we are waiting for the V leg and F leg to be posted. So in that case, of course, you can wait for some time to see because it is an internal teams matter, and internal teams, they can post it out. So sometime what happened due to bank holidays, or let's say team was not there for that particular day due to XYZ reason, or maybe sometime technical reason also, like system was down, and that's what the team couldn't post the breaks in the system, because see, leisure updation, which is a part of your internal teams, and they should update it out. And if they haven't, so it means you should wait, or maybe you can send email to them stating that, look, we have received coupon, so can you please post it out. And meanwhile you can update a comment also. And sometime what happened, you can see discrepancy in the payment also, so that you have, let's say, updated this, but you have received, instead of 250 you have received only 200. All right, maybe let's say broker fees applied or XYZ things happened, right, and you have received less amount or maybe excess amount, that also happened, and that portion you can adjust in accounting system. See, as accounting team, we cannot modify broker system. If you are working at a broker, then you can modify the broker records and update the statements, but at a fund accounting level we cannot modify the brokers statement. But yes, we can send email to the brokers and ask broker to modify the records from their side, so your statement versus ledger, it will perfectly match. So basically this is how your interest rate swaps breaks works in reconciliation systems. All right, so I'm done with this particular session. So if you have any questions as such, or if you want me to discuss any critical breaks like this, then you can update your, let's say, break types in the description. Definitely I'll prepare kind of this and get back to you, or maybe I'll record the session and upload it on YouTube, guys. All right, anyways, so you can also try it. What if, let's say, you have a the coupon payment which is broker posted, right, with the big amount, very big amount, and you are not able to or figure it out, let's say, ledgers, right? So now my question is to you, how you can resolve that breaks, and let's say your client is seizing to you because it's a client money, it's a huge amount. So now you tell me how you can try to resolve that particular breaks in your accounting system. So let's try this, all right, and you can post your resolution in the description, because this question was asked in the interview. So that's what I thought, like, I should ask this question to you. If you are not able to resolve it, then definitely I'll cover that in my next video. And also I would request you please click on bell icon, because I'm going to cover the other breaks as well, like repo breaks or dividend breaks. So there would be more and more breaks that we're going to cover it through flows. So it means like this, so you can understand the flow, and also you can understand how you can match it off. And also same logic, if you are like, let's say, business analyst or fund accountants or reconciliation analyst, then this will help everyone, or even consultant also, to understand the flow, including CFA, CA, whosoever. All right, because guys, ultimately, see, both the counterparts, they're working for this particular benefit. Both the counterparts, they're working for this particular benefits only. All right, so net cash flow. So yeah, so we'll see you next session. By the way, we have launched course on ESG now. So few modules we have recorded and loaded in the course. It's a self space program. If you are really interested to learn it ESG, you can enroll there. I'll provide link in description. And also, if you guys are really interested to upskill yourself on fund accounting, maybe hedge fund, private equity, real estate, SPVs, and all other the products, then why don't you join my program? Because in a program we discuss content in this way only, so that helps everyone to understand. Even if you don't have, let's say, background of fund accounting, still you can join, learn, and earn well in the industry. All right, so we'll see you next session, guys. Thank you for watching this session. We'll see you. Thank you.